If your finance team is using AI only to write emails, you are leaving most of the value on the table. The real value is workflow automation. 6 workflows can change the finance team immediately. Accounts receivable follow-up, accounts payable review, month-end close management, variance commentary, cash forecast updates, board pack preparation. This is the faceless CFO. Today, 6 AI workflows every finance team should automate. Not someday. Not after a giant transformation project. These are practical use cases a CFO can pilot now. Workflow 1. AR follow-up. AI can read the AR aging, identify overdue accounts, summarize prior email threads, draft customer follow-ups, and recommend escalation. The finance team still approves the message, but AI removes the manual work of searching, drafting, and prioritizing. The output should be a daily AR action list. Customer, amount, days overdue, risk, last response, next action, and owner. Workflow 2. AP review. AI can summarize vendor invoices, flag unusual amounts, identify duplicate invoices, extract payment terms, and compare spend against budget or prior month. This does not replace approval controls. It improves the quality and speed of review. The CFO should focus AI on exception detection, unusual vendor, unusual amount, early payment, missing PO, duplicate invoice, new bank details, or unexpected renewal. Workflow 3. Close management. AI can monitor the month-end close checklist, draft reminders, summarize blockers, identify overdue reconciliations, and generate a close status report. This is especially useful for small finance teams. The close becomes visible. Who owns the task? What is late? What is blocking close? What needs CFO attention? AI gives the controller and CFO a live operating view. Workflow 4. Variance commentary. Finance teams spend hours writing commentary that follows a pattern. Actual versus budget. Actual versus forecast. Actual versus prior month. Root cause. Action. AI can draft the first version if the data is structured. But the finance team must validate the story. AI can explain movement. Finance must explain meaning. Workflow 5. Cash forecast updates. AI can help classify bank transactions, compare actual cash to forecast, summarize collections movement, flag large upcoming payments, and draft weekly cash commentary. AI can also help identify customers who historically pay late and vendors that create renewal spikes. The CFO should use AI to speed up the update cycle, not to outsource cash judgment. Workflow 6. Board pack preparation. AI can turn financial dashboards into first draft narrative. What changed? Why did it change? What are the risks? What decisions are needed? It can summarize KPI movements, draft variance explanations, and create board-ready talking points. But board materials require trust. Everything AI drafts must be reviewed, fact-checked, and tied to source data. Now, how do you choose which workflow to automate first? Score each workflow on 4 dimensions. Hours saved. Error reduction. Decision impact. Implementation risk. If a workflow saves time but creates high risk, pilot internally first. If a workflow saves time, reduces errors, and improves decisions, prioritize it. For most finance teams, the best first pilots are AR, follow-up, variance commentary, and close management. The CFO should define success metrics. For AR, reduction in overdue balance, faster follow-up, better owner tracking. For AP, fewer duplicate payments, faster approval, better exception detection. For close, shorter close cycle, fewer late tasks, clearer blockers. For reporting, faster commentary, fewer manual edits, better consistency. For cash forecasting, faster weekly update, better variance explanations, earlier risk flags. For board packs, shorter preparation time, and clearer decision narrative. If you cannot measure the improvement, the automation is just a demo. Avoid the common mistakes. Do not automate broken processes. Do not let AI touch sensitive data without governance. Do not remove human approval from high-risk outputs. Do not use AI-generated commentary without source checks. Do not chase novelty instead of measurable time saved. Do not build pilots that only one person understands. AI works best when it is embedded into the finance operating rhythm. The finance team of the future will not be defined by who can manually prepare the most reports. It will be defined by who can design workflows that produce reliable outputs faster. AI is not the strategy. The workflow is the strategy. AI is the accelerator. That is how finance teams should automate. If this helped, hit subscribe. New videos every Tuesday and Friday. Drop a comment. Which of the 6 workflows should finance automate first? Next video: how CFOs use AI to close the books faster.